Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, Spicejet's former promoter Kalanithi Maran of Sun Group will contest the ruling of an arbitration panel that rejected his claim of damages and repossession of control of the airline after a share transfer dispute. Our colleague from CNBC TV18.com, Binoy Prabhakar, joins us with more details on that. Binoy, good morning. Over to you.
Yeah, hi. There are three vital parts of to the arbitration panel's ruling. One, it rejected Kalanithi Maran's claim of compensation of rupees 1,326 crores for not issuing convertible warrants because it found that there was no breach of the share sale and purchase agreement signed between Maran and current Spicejet promoter Ajay Singh in January 2015. Spicejet had argued that it did not issue the warrants because there was no regulatory approval. And Maran had wanted repossession of control of the airline if Spicejet and Ajay Singh were unable to pay the damages. So the tribunal has effectively ruled out repossession of control of the airline by Maran. But the tribunal did order that Spicejet has to refund Maran a sum of rupees 579 crore plus interest that he had paid as a subscription amount for the 18.91 crore warrants. Yeah.
All right, Binoy. Thanks a lot for that. So that is one stock that we will be watching out for. Meanwhile, just take a look at the Asian markets. They were weaker in trade earlier as we spoke, but we've gotten early rates come by from both the Hang Seng as well as the Shanghai. So the Hang Seng index is actually up by about 4 points, but it opened much higher now currently at the low point of the day. The Nikkei is actually closer to the lower end of today's trading session with a cut of almost 300 points. The Shanghai index too is lower by about 0.4%. The SGX Nifty earlier indicated a flat start is now currently sitting with a flattish start itself. The Japanese index of course weighed lower by the strength that we're seeing in the yen as well as the weakness that we're seeing on the dollar.
Okay, let's do one thing. Let's head to the earnings corner and see how Wipro reported its numbers. Well, it looked like they were a tad bit better than expectations. But Rima, good morning. Tell us whether the growth rate is enough for the company to get re-rated and what do you make of the guidance as well?
Well, you know, on the whole, Anisha, I would say the numbers are mixed. On one hand, the revenue performance in Q1 was slightly better than very low expectations. The guidance was also slightly better. But on the other hand, the margins were a big miss. And even their commentary on verticals like manufacturing and healthcare was a bit subdued. So first on the numbers. So revenue performance was better than estimated. The constant currency growth has come in at 0.1% versus expectations of a 1% decline. That said, its performance is still significantly trailing its peers. So a 0.1% for Wipro compares with the 4.1% that TCS clocked in and a 2.3% that Infosys had. The miss is coming in the margin performance. So the adjusted margins are a big miss, and this is despite the rupee depreciation, the improvement in the utilization, and the wage hike for Wipro was only for 1 month this time. The next quarter, the wage hike impact will be for 2 quarters. So the adjusted margins have come in lower by 120 basis points year on year. On to their guidance for Q2. So Q2 guidance stands at 0.3 to 2.3%, slightly better than expectations of a 0 to 2% growth. BFSI continues to be the growth driver for Wipro for the last 6 quarters. That said, they see headwinds in other verticals like utilities, communications, healthcare, their India business, which is hampering growth. You know, for the full year, however, the problem for Wipro is growth. Estimates still, suggest that growth is going to be in low single digits. So Macquarie says for FY19 growth is going to be at 2.9%. Investec is at 2.7%. The ADR was up nearly 1.5% overnight in the US. So perhaps there could be a green tick to go for. But again, not much in the numbers to push the stock materially higher.
All right, Rima, thanks a lot for that. So that is one stock we'll be watching out for. Let's shift focus to the big deal that took place over the weekend. The whispers were there for the longest time. The stock price as well did react earlier on the negative side. We have seen a sharp correction in the stock price of UPL itself from the start of this year. It's down more than 30%. Now the deal announcement. Sonal joins in with all the details. Sonal, the Arista acquisition has finally happened.
Yeah, exactly, Mangalam. So, well, if I take you to the details of the deal, UPL through its wholly owned subsidiary UPL Corp will be acquiring Arista Life Sciences for a sum of around $4.2 billion, out of which $1.2 billion will be invested by TPG and Abu Dhabi Investment, and the whole deal is in a cash consideration. Now, if I go through the financials, UPL numbers, the revenues in FY17 stood at around 17,000 crores, EBITDA margins of around 20.23% were made by the company. The debt in the books of the company was around 6,000 crores and the net debt stood at around 3,600 crores. All this took the net debt to EBITDA levels at around 1.02 times. If we go to Arista Life Sciences, the revenue for the calendar year 17 stood at around 13,000 crores and the margin stood at around 20.45%. However, Arista has no debt in the books as of now. Company says that it will be taking debt of around $3 billion to fund this particular transaction, and also the interest will be around 4.5%. The interest rate will be around 4.5%. There was a conference call also that was organized by the company where they said that this is a good deal that they've entered into. They expect cost synergies of close to $100 to $120 million in first year and around $200 million thereon. Also, they expect that since these businesses are very complementary, it will give them good access to other markets like Europe, Brazil, where right now UPL does not have much presence. Also, the incremental interest cost will be around $120 million, and the EBITDA levels, they're expecting synergies of around $425 million in that particular place. Some positives of the deal, it gives the company well diversified portfolio, and the negatives will be the high leverage that the company has right now.
Okay, Sonal, thank you so much for that. In fact, on that note, let's hear our Jay Shroff, the CEO of UPL, on the rationale and benefits of this deal.
We know this asset very well. This asset has been owned by Primera, and even when they bought it, we looked at it very carefully. This time round, about a year ago, they followed a process to sell it. We did a complete due diligence, and then we couldn't agree on the deal. It came back again about 60 days ago, and we were able to move quite quickly because we were able to agree, and we were quite confident that the business of Arista is completely complementary. We were surprised how complementary the business is and how much optimization we could do to the business to make sure that it becomes very profitable for us and it becomes very accretive to us. We were in discussions with ADIA for a long time. They've been talking to us about possibly doing something with us even before this deal emerged, and when this deal emerged, they agreed to partner with us on this deal.
Jay, from 12 months back to now, because you've closed this deal in the last 2 months, what has really changed, and what made you finally decide to pay top dollar $4.2 billion to buy this asset?
So we think it's an extremely good deal because we have our cost optimization. What we've announced is a very conservative number of about $200 million.
Power Breakfast on CNBC TV18, the big boy on Saturday. HDFC Bank reported its numbers. Abhishek tells us the profits are the lowest in the last 6 quarters. He's with us to tell us more. Abhishek.
Well, good morning, Mangalam. Well, the loan growth has picked up, as compared to the previous quarter. The loan growth is at 22% versus 19% that they saw in the previous quarter. However, the NII and the operating profit growth is the weakest in last 8 quarters. The NII growth coming in at 15.4%, while operating profit growth has come in at just 15%. And NII is impacted due to the fact that they have been gaining market share, but that is coming at a cost in terms of yields on advances and cost of funds, while the operating profit has been impacted due to the lower other income or the treasury losses. You look at the net interest margin at 4.2%. It is the lowest in last 6 to 7 quarters, and that is on account of the continuous decline in their low-cost deposit share, which is now at 41.7%, the lowest in 7 quarters. The slippages or the fresh accretion to NPA remained elevated at 3,548 crores. That compares to about 3,100 crores in the previous quarter, so that remained elevated. Other income income at 3,800 crore was down about 10%, and that was largely due to the fact that, you know, they had a treasury losses. So their numbers came in below estimates. The NII at 10,800 was well 308 crores below our poll of 11,121 crores, while the net profit came in at 4,600 crore versus our estimate of 4,763 crores. So the gross NPA in absolute value increased by 11%, while in ratio it was at 1.3%.
Okay. Well, the intercorporate agreement, which is actually a contract between Indian banks, will be signed and publicly released today. Now, top banking sources told CNBC TV18 that. Now, this agreement is intended to replace the Joint Lender Forum, or JLF, that the RBI recently did away with. Lata has more details on that. Lata, good morning. Over to you.
Good morning. This can be a landmark agreement in the history of Indian banking. Now, the immediate trigger that has led to the birth of this intercorporate agreement, basically a contract between banks, is the February circular of the Reserve Bank of India, which disbanded what was the earlier Joint Lender Forum. Now, why do you have these consortium of banks or contracts of banks? Because all loans are given by many banks. So if a borrower defaults, necessarily banks have to get together and resolve it. In fact, the February 12th circular mandates that even in the first instance of default, banks have to get together and put in a resolution plan. Now, how do you get together? It is to serve that purpose that this agreement is being signed today. It was mooted by Finance Minister Piyush Goyal, and there has been on the same day that the AMC and the AIF and all were announced by the Sunil Mehta committee. On the same day, the intercorporate agreement was also planned, and over the last 3 weeks, banks have been having hectic negotiations on finalizing the contract. The board of every bank has to vet the contract. Now, what does the contract require? One, that any agreement by 66% of the banks by value of a loan has to be endorsed by all the banks. You cannot have a dissenter. If there is a dissenter, the dissenter has some rights. He can sell the loan to the lead bank at 15% discount. Alternatively, he can buy back all the loans from all the banks and say, I'll resolve it single-handed, in which case he has to pay a premium of 25%. Alternatively, the dissenting bank can sell it to anybody outside, a bank or an NBFC at a pre-agreed price, at a price between them. But he can't sell it to an ARC. Now, let me tell you that this is what I heard as the rules of the intercorporate agreement when I last heard it. We don't know what the final form will be. We will know that today when it is revealed. In all probability, the IBA, the Indian Banks Association, will call a press conference in the afternoon today to announce the details of this agreement. It may be landmark in the history of Indian banking. All loans are going to be resolved under this agreement, or it may be a non-starter like the previous JLF was. We have to wait and see.